All right. Hello, everyone. Welcome to your Monday market check-in here with myself, Greta Wall. I'm your host, and I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and leader of T3 Live's Pro Desk virtual trading floor. Before we get into any market discussion here, let's take a quick look at Derrick's current positions as of our recording here today on Monday, July 20th. Wow, this month is flying. Again, Derrick is the head trader at T3 Trading Group, so this is just disclosure purposes. Derrick, how is your Monday going so far?
My Monday is going. It's been pretty slow, but the P&L is green. I can't complain. I think some of that is still just a carryover from us doing a really good job on Friday. The team and myself had some really good calls at Lowe's to come in and buy the dip on Friday, and get a little bit of follow through to the upside on some of that stuff today, and it's helping the P&L. But otherwise, things are pretty slow. I think that this market is just waiting on Google primarily at this point.
Yeah, definitely a big week of earnings for this market for sure. The title of our stream today being Summer Bottom. And so let's talk about Friday and whether you think we put in a bottom for the summer last week and where we go from here. So the AI and chip stocks rebounding today. And of course, for traders like you who bought the right names on Friday, that's a good day on a Monday after a Friday like that. So what do you think about the market? Happy bottom.
Summer bottom, huh? I love it, but it's a big call from you, Greta.
There's a question mark on the end of that.
No, yeah, I am still overall pretty bullish on this market. You know, we had such a huge rally led by the AI trade in April, May, and the beginning of June. The market really needed to cool off. It needed to cool off technically. It needed to cool off a lot of the overextension of positioning. People going from massive ownership of puts and no calls to the end of March to massive ownership of calls and no puts by the end of May, and that needed to steady out a little bit. So at this point, we actually basically entered a bear market in semiconductors, which again, I just calling it a bear market because it went down 20%. I mean, this is not a bear market, but technically it meets that definition. It's just that there's so much volatility, so it's easy for the semiconductors to pull back 20% just as part of a bit more of a standard correction, because all it did was bring us back to the levels that we were trading at in May. But this was a positioning correction, and that's important. There, at this point at least, has been no fundamental change to the AI story, to the story that's coming from hyperscaler CapEx spending that NVIDIA and Micron and SanDisk and all these companies are just benefiting from. The big question is if and when something will change with the narrative. And most likely, if something does, we would see it in earnings season. So that's what makes this earnings season in particular, I think, really, really important, especially with Google reporting on Wednesday. When Google reports, when Meta reports, when Amazon reports, do any of these companies indicate that they're pulling back on their AI CapEx spend because the revenue that they're receiving just doesn't justify the cost anymore? If we see that happen, that could be the real unwinding of the narrative that could create a very, very big change in how this market is trading. But until I actually hear that from these companies, I'm maintaining my bullishness, because even if that happens, these semiconductors at this point are kind of cheap, and they've already pulled back 20% into earnings season. So they're pricing in a percentage chance that one of these hyperscalers pulls back on their CapEx spending. If that doesn't happen, it's probably right back to all-time highs with these things. If it does happen, we have to reassess, but a little bit of it is priced in at this point. So that's the big story. That's what we're waiting on. But overall, I'm here to buy dips.
Let's talk about Friday a bit, and what was your strategy for that session, and the names you focused on, because there was a lot that you could have bought in the market. So where did you focus as a trader, and how have you managed that into today?
Let me pull up some charts.
Yeah, for sure.
just did the screen share over here, so you
Yeah.
should be able to see that. Okay, cool.
Charts are up.
All right, so this is just daily chart of the SPY. You can see the gap down here on Friday, but overall, if you look at this, the SPY is fine. It's within a very broad consolidation that's been going on for 2-3 months now. Even into the gap down, we held this minor 570 support. 570 is a little bit important to me. It's been a big like inflection point. It's kind of the midpoint of the big range that the SPYs have been trading in. It's acted as resistance. It's acted as resistance. It's acted as support. Sorry, I just said that backwards. Well, hold on. Let me start from the beginning again on that, because it's happened.
You were right. Resistance and support. Yeah.
It's acted as resistance. It's acted as support. It's acted as more support. It's acted as resistance. It's acted as support. It's acted as resistance. It's acted as support. And on Friday, once again, it is acted as support. So it's an important level. Above that, I consider the SPYs to be what I call neutral bullish. Below that, neutral bearish, but still neutral. The bigger, more important area is still down here at like 725. If we lose 725, this market's going to look a lot more bearish, but that's very far away. So that's the SPYs. The SPYs are never unhealthy at all. The IWM, never unhealthy at all. If it starts getting below 290, I'll get a little bit concerned. We did gap down, but it was able to recover pretty nicely on Friday. The problem stems very specifically with QQQ and semiconductors. And basically at this point, which I still find to be fascinating, the QQQ moves more based on the SOXX than it does based on the Mag 7 companies, which you almost would think it's a mathematical impossibility, but these semiconductors have just become so important. So the Qs are a little bit more concerning. It was a day 3 gap down. We got below this kind of important level 1 $700 support, but we still held this broader low here from the June lows down at like 685 or so. So that was a little bit of a concern. And semiconductors, again, you can kind of see the bear market here getting all the way down to SOXX 500. But the fact of the matter is the Qs here on Friday hit my measurement of extreme extension on the downside, with the SPYs and IWM still looking good. So I like to look at all 3 indexes in conjunction with one another to see if they're telling me the same story. I think we went over this last week. So the Qs got to extreme downside extension. And most importantly, there's no fundamental narrative shift yet, at least, with the semiconductors, which leads me to believe that this is just a positioning wash. And because it's a positioning wash, you need to unwind that positioning. It's eventually going to lead to being a dip buying opportunity until and unless the narrative changes. So that's kind of the background to give some of the conviction to be able to buy it. Then you had this SOXX gapping down into 500. It's a really important level. Qs at extreme downside extension. That was the opportunity to buy. The one thing that made me nervous on Friday was the fact that it was options expiration and the fact that it was a Friday. Fridays can be tricky, especially when we're hearing rumors of a ground invasion in Iran and stuff like that. But the fact of the matter is that the semiconductors don't really care about the Iran situation very much. They don't care about the price of oil. They care about if Meta is going to continue to buy more chips. So it just led to a great buying opportunity. And then, you know, we go big picture down to small picture. Big picture is telling me I should be looking to buy the dip. Small picture gives the execution setup. This is the 5-minute chart now. Just the classic huge gap down, 3 5-minute bars of heavy selling. This type of momentum selling after a gap like this is usually forced selling from people who are mispositioned, and they're forced to peek out their stock. The degree of the selling here on this 5-minute chart is unsustainable. Could it go for another 5 minutes? Yeah. Could it go for another 10 minutes? Yeah. But at this rate, it's unsustainable. And given where we were with that degree of extension in the big picture, I'm just looking for that buying opportunity. I was actually talking to the team about this a little bit this morning. A lot of times when you get these big gaps like this, one of 2 things is going to happen when you're going to get the bounce. Either they are immediately buying it up on the first 5-minute bar and you need to just go long right away versus the low of the first candle, or there's a washout for like 3, 4, maybe 5-minute candles, and then you get like a really good extension pivot low to be able to come in and buy. So we were calling out the QQQ long versus that low. Back over in this SOXX, I remember we called out the long through $500 on the way back up. that would be $1.50 worth of risk to this low. The reward on that intraday yesterday gave you $32 worth of reward on your $1.50 worth of risk. If you swung it, then you're $40 in the money at a certain point this morning off of $1.50 worth of risk. And honestly, it's not impossible for this chart to break back higher and reclaim some levels. And if earnings season goes well, to get back to all-time highs. Sometimes markets give you these opportunities. They don't come around that often, but it's the opportunity that can help make your month, make your quarter, make your year, and you just have to be prepared for it, and you have to be able to step in, and you have to know to be greedy. So the whole way up on Friday, we were saying like at least with a percentage of the position, not 100% of the position, but 15 to 50% of the position. Be really, really greedy with it. Like there's a certain point on the way up with some of these things, or like AMD was another one that I was buying into this down move on Friday. And I remember still saying at 480, I'm now like $20 in the money on my position. I would rather give this thing all the way back. I sold some, had like 40% of my position left. I sold 60%. With that remaining 40% of the position, I would rather give it all the way back, get stopped out, and make nothing or make very little on it than just liquidate here for the P&L that I'm currently open. Because you need to maximize reward in certain situations when the opportunity is there to do that. And sometimes that requires the best way to really maximize reward, the best risk to put on in trading, in my opinion, is to risk what you've already made. That's where reward maximization comes in. And you only need to trade every once in a while if you're able to be long in SOXX from 500. I'm not saying that this is going to happen, but let's say it does. It gets back to all-time highs. It's very within the realm of possibility. Maybe it breaks all-time highs. The technical continuation here on a break of all-time highs would be like another $160 to the upside. You could go to SOXX $800, and it could be off of this low, and you could trail a little bit of it the entire way up. The reward that you make from one trade like that once a year can just make up for days and days and weeks of trades that don't work and stop you out and cause you to lose money over and over and over again. Like that's what we're here for. Mm-hmm. So, that opportunity was there on Friday. I hope traders took advantage of it. And again, today has been very slow, but I'm just resting on my laurels from the hard work that I had done on that day.
Yeah. On the management side of like a trade with a trailer like that at the end of a trade, obviously you've taken profits along the way and you're down to that small chunk of a position that you're letting ride to take advantage of more upside. How do you, where do you set like a stop loss on that? Are you setting it at a break-even point? How are you managing that part of a position at the end?
Sure. So I don't like the concept of like putting your stop loss at your entry price or whatever. I don't like doing that. I want all my stop losses to be based off of things that are important to the market. So very clearly and obviously this low, the absolute low here, that's just a really important spot to the market. The market's telling me it's important. Why is it important? Well, at this point here at 9:40 a.m., at the low, 498.54, something magical happened at that price. Sellers were in control. That's why this bar is red and this bar is red and this bar started with selling. And at that price, at that low, that is the price where buyers took control from sellers. So that gives that price importance. So then that's my trigger on the way up. I'm buying this on the way up, taking advantage of the downside extension. The doji comes in, the stop loss is going to be that low. From that point, I've got rules that I can follow for trailing if I choose to. And you can do it on multiple time frames. I don't like to trail based on like percentages. So I'm going to do like a 1% trail from wherever it's trading, just making up a number. And again, I'm just making up a number because that's the point. It's arbitrary. And people do that. I don't like that because it's random. What does 1% matter? Why 1%? Why not 1.25%? Why not 2.25%? And then you can start to play these games in your head of, well, I gave it 1%. I should have given it 1.25% because I got shaken out. Like, that just doesn't make sense. I want to take the randomness out of trading, not add more randomness into trading. I want everything I do to be based on information that the market is telling me. So if you want to trail this here on the 5-minute chart, well, here is a pivot low that then gets confirmed by a new high. So then this is a confirmed higher low. This price becomes important in the market. You can raise your price from there, depending on how tight you want to keep it. And you can trail on multiple time frames. You can trail a percentage on a 5-minute, a percentage on a 15-minute, percentage on a daily chart. Maybe you raise your stop again to this pivot low right here when the new high comes in, and then you get stopped out on the way down here a little bit after 2 o'clock. Or maybe at that point, I don't know what the 15-minute chart looks like off the top of my head, but we can take a look here for Friday. Friday off a 15-minute chart, if you're trailing there, you could have gotten stopped out as well. But maybe a percentage of it, you say, you know what, I love what the daily chart's telling me, so I'm going to give a percentage of it back, and I'll try to trail on the daily chart. In which case, you're still willing to give it all the way back to this low for the chance that this thing then breaks up and creates a higher low and a higher high. And then once you get that higher low, then you can raise your stop to that higher low because it's now important to the market on the daily chart and continue from there. So yeah, that's what I'm trying to do from a reward maximization perspective.
I know you as a trader, you're a top-down trader. You start with the market and the indices, and then you look underneath the hood from there. So on a big gap down day like Friday, when you're prepping for the morning and trying to decide, because obviously, there's a lot happening at 9:45, 9:48, 9:50. You can't then be looking at charts to figure out what names you want to buy. So how are you narrowing it down to, obviously you can buy the Qs and you can buy the stocks, but if you want to buy a Micron or a SanDisk, an individual name, how are you choosing those?
Sure. So you got to do a lot of work every morning. That's one of it. This is not just some sort of get rich quick scheme that we're operating here by being traders. I wish it was as easy as that. So you got to put a lot of work in the morning. I start my mornings really early. I am doing a lot of research. I'm seeing what got upgraded, what has news, what had earnings, what has relative strength, what has relative weakness in the pre-market. Does that pre-market relative strength and relative weakness hold on after the market opens? Because sometimes that it can change quickly after the market itself actually opens. Assessing all of that information in combination with the technicals, going through everything. And on top of that, I'm also reading research, a lot of research reports that are coming out of the big banks that can also help potentially with my conviction on my trades. So for a morning like Friday, it's a combination of things that I'm looking at. One, top-down approach. I like to look at all of these indexes in conjunction with one another to tell me what story they're telling me. SPYs, they're bullish. They're fine. The IWM, it's bullish. It's fine. The Qs, a little bit more concerning, but the Qs are at my extreme extension point to the downside. So what that means to me based on my trading rules is definitely do not short. I will not short something that is at extreme extension down in the same way that I won't buy something that's at extreme extension up. So do not short. And potentially, if it makes sense, consider going the other way for counter trend or counter momentum type of trade. And counter trend trading is difficult. But again, SPYs look fine. Russell looks fine. I've got the extension here on the Qs. On top of that, I'm reading some research out of Goldman Sachs on Friday morning that helped add to my conviction, which basically said, doing a historical analysis of their momentum basket that they look at, which is 95% correlated to the AI trade. When you get to this point, it means you're getting closer to the end, is the brief summary of the Goldman Sachs research report. And I also know at the same time that, what is the cause of the pullback in the Qs? What is the cause of the pullback in semiconductors? It's just positioning related. It's not a fundamental change to the story. So all of that coming together says to me, all right, what am I looking to buy here? Am I looking to buy these Qs? Is it time to be able to buy these semiconductors back up? And then if the answer to that is potentially yes, which I thought it was, how do I execute it? And that's how you put together all the pieces of the puzzle, and then eventually gives you the execution set up. And maybe I'm right, maybe I'm wrong. Maybe I get stopped out and I lose my risk. Maybe I get stopped out 4 times and I lose my risk 4 times. But if that idea comes together and I'm right, the reward profile what I'm going to make is going to be so much significantly greater than the other side of the trade.
All right, so you mentioned Google, and that's obviously the biggest earnings report this week, but there is some other names reporting on Wednesday as well. Tesla, probably just as big as Google. So Google and Tesla both on Wednesday, but also Texas Instruments, chipmaker, IBM, ServiceNow. Software has been real rough lately over the past few months. So the ServiceNow report, I think, really important. And then Intel on Thursday. So those are kind of the big highlights. So you talked about Google, maybe talk about some of the other reports and what you were focused on for those. And then if there are any other reports that you specifically are focused on and looking at that aren't maybe the highlight reports that the whole market is really focused on.
Yeah, so Google, I think, is the main event. I think it is the most important one because it is one of the hyperscalers. It's got the massive CapEx spend. They had a little bit of a warning on their Gemini on Thursday of last week that it was a little bit behind, and that hit the stock down really hard. So we'll see what they say. I think this is the most important name that's going to be reporting because, again, it just has a direct impact on DRAM. It's got a direct impact on SOXX, and therefore it's going to have a very direct impact on the QQQ. So that's what I'm paying attention to the most. Tesla, I really don't think has much like systematic importance to the market overall. Like a little bit, they're a bit involved in the AI space now, but I think that Tesla's almost like Netflix to me at this point. Like Netflix, when it came out on Thursday night, it was interesting, but I'm not taking a view on Netflix and saying this therefore means X, Y, and Z to the entire semiconductor complex and the AI trade. So Tesla will be interesting to see. It's always a volatile name. It's got a volatile CEO. So we'll see how that one plays out. Intel's certainly going to be a little bit more important. And TXN, I sometimes like to refer to TXN as the forgotten semiconductor. It's just not like an exciting semiconductor stock like a lot of the other ones are. So it's been around forever.
But so many of them were not exciting until they were. I mean, I'm thinking like Seagate, Western Digital, SanDisk, like these old companies that all of a sudden are so exciting.
It's a really good point. In my brain, you still think about your calculator that you had.
Think about a calculator, yeah.
Back in 8th grade for Calculus 101 or whatever. But TXN does move on its earnings report, and it moves the SOXX, and it certainly did that last quarter. So it's also going to be a pretty important one. I mean, you know me, I don't really take strong views going into the reports. I'm more of a trader who likes to trade the reaction to the event than anything else, and I'm going to just be digesting what we get from Google, Intel, and TXN in particular, I guess, and trying to figure out what that means for the overall semiconductor trade and the AI complex, because it's the most important thing economically in the universe right now. The entire economy is basically AI capex at this point.
Yep. All right. So sitting here on a Monday after a big Friday for you and your team, any setups that you like in this market, or are we just waiting until we get through Wednesday?
Kind of waiting until we get through Wednesday. I just, the way that this business works is you got to just be there for when the opportunity is there, and then you got to know when to take your foot off the gas pedal. So I think it was kind of pedal to the metal on Friday and foot a little bit off the gas pedal now while we wait for further information. I am broadly bullish until the market tells me through price and story that I shouldn't be anymore. So I lean towards buying these dips, but SOXX and QQQ are still a little broken at this point. Really, I need this SOXX to get back above like 600, 605 to start looking really good again. QQQ really needs to get back above 730 to really start looking good again. There's a lot of work that those areas of the market have to do. And we'll see what kind of resolution we can get post these earnings reports. And until then, it's kind of just singles and doubles. Some singles and doubles we communicated in the virtual trading floor at the index level and a couple different stocks this morning with honestly somewhat mixed results. And the bigger picture stuff is usually where the home runs can come from. And right now we're waiting for that stuff to reset up.
All right, all right. Derrick is a real trader, so you do want to let him get back to that. Again, he's the head trader at T3 Trading Group. You can go to t3live.com/DOLive, fill out that form there. And if you have any interest in working with Derrick and the team there at T3 Trading Group, and that's t3live.com/DOLive. Derrick, have a great Monday and a good week. I hope lots of good big moves off these earnings reports that you and your team can take advantage of, and then we'll have lots to talk about in a week from now. Have a good one.
Thanks, Greta. Talk to you soon.